You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. Quite a few programs on the network, 13 to be precise, covering all facets of the options market. If you guys are in the active high-end retail trading scene, well, then this is the show for you. You're in the right show. Congratulations. Go check out the 400-plus archived episodes of this show, available wherever you find your finer podcast programs, iTunes, Stitcher, AHA Mobile, our website, theoptionsinsider.com, and perhaps even, if you're into the mobile devices, our mobile app available for iOS, Android, and the Fire OS. 400-plus hours of content just in this one show feed alone. And then we have the other dozen or so for you to check out: basic, intermediate, advanced education, volatility trading, financial advisors, futures, options, you name the segment of the options market, we've got a show for you. And if we don't, if we're missing something, let us know. We'll make sure we add it into the rotation very soon. And joining me on the old Options Bootcamp All-Star panel today, starting off with the man beaming in from the scenic and lovely St. Charles, Illinois. You know him, you love him, as Uncle Mike, and also the Apple devotee here on the old program, Mr. Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, and happy Apple earnings week to you, sir.
Ah, yes, earnings week again. My family can eat again. Very nice, very nice. Always happy to be here, as always.
Paid the bills for another quarter. Now you can go back to sleep, sir.
There you go. Talk to you later.
All right, and also joining us on the old program today, you know him, you love him, as the Greasy Meatball. He is the founder of Option Pit, Mr. Mark Sebastian. Mark, welcome back to the program, sir.
Hey, it's good to be here. Been a while. I'm excited to be around, though, and talking to the gruesome twosome.
You ready to block some options?
And Alex.
I was going to say, we got a little more than two, but math is hard.
The math test is hard.
And speaking of the Viceroy, we are also joined by the man of many hats, a.k.a. Mr. Alex Jacobson, the Viceroy/VP of Education over there at Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir.
Good to be here today, Mark. And today was, for some reason, a fun day. And I thought, as I was kind of writing my notes prior to the show, why are up days more fun than down days? You think in the options market they'd both be fun, but for some reason today was a fun day. So lots to talk about. We got Amazon and Google coming in after the close today, so it's going to be a fun day to be a market maker tomorrow for the week 5 weeklies.
Yeah, it'll be fun for our listeners, too. And a lot of our listeners, I'm sure, are very active this week. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, you guys know the drill by now. This is indeed the portion of the program where we break down what we're watching, what caught our eye in today's activity, and indeed after the bell, because it is earnings season. We are recording this today, Thursday, January 29th, so bear that in mind for all of you out there playing the home game. And it was rally ho mode on the street today. Most of the major indices closing up right around 1% or so. The S&P up about 1% to about 18.5 on the day. The Dow a little bit of a leader, 1.3% on the day, or over 200 handles. And the Q about same percentage-wise as the S&P, up about 0.9 of a percentage point. The VIX cash coming off its foray into the 20s there, down right around the 19 even handle, off about $1.50 or so on the day, or 1.5 points, I should say, instead of $1.50. All right, and as Alex alluded to, there are a lot of things to get to after hours. We're waiting for Amazon. We're waiting for GOOG. So while we do that, maybe we'll dive in with Uncle Mike, because he had one of the big movers and shakers in his neck of the woods this week. Of course, that little bitty fruit company called Apple, and a lot of naysayers were coming in saying this and saying that, and Apple pretty much comes out and just blew the doors off of it this week, closing today up 3%, but it's not it's been rally ho mode pretty much post earnings all week, closing today right around 118, just south of 119 today. If you recall in our last episode, Uncle Mike was perhaps stepping back a little bit from his bullish rah-rah Apple mode, so it'll be interesting to see if these earnings have changed your perspective at all, Uncle Mike. The biggest corporate earnings of all time, pretty much record numbers across the board. People seriously cannot buy enough iPhones. I forgot what the number was. Some ridiculous number of iPhones sold per hour throughout the entire quarter. Just a ridiculous number. So tell us what your take was on the earnings, what adjustments you may have made, and if this has indeed shaped your outlook going forward for Apple.
Well, it still has not made new all-time highs, so that was kind of, I guess maybe the one time that you know to be bullish on Apple is when I start to not be quite as bullish as I normally am on Apple, then that's a surefire sign to get more bullish on Apple, apparently. So, I don't know how earnings could have possibly been much better. It's obviously, it's been a great run this past week for it. I'm still going to be of the school of thought that I'm still concerned until we break the 120 level, or the 119.75 level, I should say. We're $1 away from that. That could easily happen tomorrow. That could happen in after hours trading right now as we speak. Who knows? But I will again become a major bull on Apple again if we can break new all-time highs. But for the time being, there's no complaints here. Clients are happy. I'm happy. And that's kind of where I'm at with Apple right now. It's my hands are up in the air, but my hands are up in the air with more money in client pockets, which is never a bad thing.
Interesting. I thought this earnings cycle would rekindle the bull in you out there in Apple land. Doesn't sound like that's the case. Sounds like you're still playing wait and see out there.
I'll wait another $1. It's the bull will be rekindled once the numbers rekindle it.
Yeah, I mean, it seems like the only question out there now is if they can have another product that can deliver to the bottom line. iPhone is killing it. iPad, not so much. And the other thing is still a wait and see on the old watch. And, of course, the computers are kind of the computers.
And the watch is going to suck. Everyone knows the watch is going to suck.
The watch is the stupidest thing on the planet.
But everyone knows that the watch is going to suck.
It's an awful idea. I mean, honestly, who wears a watch except for style purposes nowadays, right? The only people I know that wear a watch so that they can tell time are people my dad's age, and my dad's in his 70s. So unless they're trying to get old people what did he just say?
Alex is a diehard watch collector.
Yeah, I have one of those.
No. Alex is crying right now, Mark.
No, I'm not anti-watch, but nobody wears a watch to tell time anymore. Is my point. And I think about it. This is the modern day Casio calculator watch. And think about all the kids that you knew that had the calculator watch. All right. Now, this is coming from someone who was quite possibly one of the 5 biggest tools in its high school. And even I didn't have a calculator watch. All right.
Okay. I had a calculator watch in grade school. Thank you very much.
Yeah. In grade school. This is the world's dumbest idea. Come up with something better, Apple. Honestly, this is going to fall flat on its face.
So we were having this conversation yesterday pre-earnings, and we all said the same thing. You know, how are they going to continue? How are they going to keep up? How are they going to do it? And here's the answer. They did it. They did it. Yesterday was a blowout. It's the biggest earnings. It's the biggest sales. I mean, you think about it. Their sales are bigger than some auto companies.
Alex, I couldn't agree with you more. Their
remarkable.
Sales blew things out of the water.
And here's the thing: people don't wear watches to tell time. People wear watches because they like watches. I mean, if you look at Wall Street and the great tradition of watches, I mean, here at OX, we used to give you a Rolex for your 10th anniversary with the firm. And as I've been chided on previous shows, I have a fairly extensive watch collection. In fact, according to my insurance man, one of the largest private collections. And you don't wear a watch to tell time. You wear a watch for the prestige. You wear a watch because you like what it does. And say we were talking about this yesterday, and everybody said, "Are you going to get an Apple Watch?" And I said, "Absolutely not. No way.
Right.
Electronic." But here's the thing. As soon as I said that, I said, I'll be in the Apple store the first day buying a watch because I'll have to have it. Because I will have to have it.
You know, and some people will, but Alex, I'm telling you, what worries me about Apple, they're never going to be is, you know, right now they kind of carry this a similar cachet to maybe what like a Sony did in the late 80s, if that makes sense. And you know, that can be fleeting. And so right now, are they making money hand over fist? Yes. Is that necessarily the case 5 years from now? 75% of their sales is phones. I mean, they are a device maker. And so that is just a dangerous model.
So here we go again. Mike, you can mitigate this one. They're not a device maker. They're a lifestyle company. And that's what they're good at. And they're a prestige retailer. And can they keep that niche? We can all speculate about it. And we were all speculating about it going into earnings. But they sold 75 million phones.
I know.
And I own 2 of them. And they're $700 a phone. And I got a 21-year-old daughter in college. And I don't mean to make light of this. I'm wearing a Panerai wristwatch on my wrist right now. Does it tell time well? Sure, it tells time okay, but it's cool. And that's why I own it. And right now they own the cool factor. In the mid-90s, you could have bought Apple almost all day long for $10 a share. 100 shares was $1,000. That 100 shares today is 8,400 shares. 8,400 shares at $118, and let's just put a value on that, $1 million.
Yep.
Now, you know, here's the great debate. We have this debate up here on the desk all the time. You know, are you better off buying an inexpensive index and putting it in your 401k IRA, or would you like to commit, and I'm going to emphasize what I'm about to say, the devil's in the details. Would you like to commit some small portion of your money to try to find the next Apple, the next Amazon, the next Regeneron, the next $1,000, $2,000 play that might be worth $500,000 or $1 million if it works? And the answer always begs a yes. And then everybody says, yeah, but I bought 10 of those and they haven't worked. Right now, Apple is hitting on all cylinders. I wrote the blog yesterday. I wrote the Expound blog, and I'm a compliance officer, so when I write, I can't be the compliance officer. When someone else writes, I can be the compliance officer. And so yesterday when I wrote, compliance kicked the blog back because I said they had a blowout quarter. And one compliance officer kicked it back and said, well, you should say they had a blowout quarter on earnings. And then another compliance officer kicked it back and said, you can't use the term blowout. They had a blowout quarter yesterday, and it was earnings, sales, product they moved. I mean, right now they're doing it. Can they do it again next quarter? Everybody's cynical, right? Everybody is sitting here going, no way. The watch isn't going to work. The Chinese are going to stop buying the iPhone. We've bought all the iPhones we're going to buy. Go into an Apple store, right? Closest Apple store to me is Northbrook Court, which is not a very successful mall. The anchor isn't the Macy's or the Neiman Marcus. It's the Apple store. That may not pay the anchor rent, but it's the Apple store. Go into the Apple store anytime it's open, right? It's packed. Right now, they own the space.
Yeah, you can't deny that Apple is cool. There's no denying that, whether you're young, whether you're old, whatever the case may be, it's cool. There's not a bigger Apple bull on this show than me over the past few years. And I've taken heat when it's gone down, and I've done well when it's gone up. Don't get me wrong. But with that, I do not own an Apple product. Yes, they're cool, but what's ironic, I own the Samsung Note. I think it's a better product than Apple. But I'm in the minority, and Apple is cool, and they're a phenomenal company for it.
Yeah, coolness is fleeting. That's the thing you've got to recognize.
Yep. Absolutely, it can be, and we all agree that we're cynical that they can repeat it. By the way, it's Thursday the 29th. Amazon just came out and they beat. And Amazon was up $8 going into earnings. Last earnings they missed, and they lost $30. So I can't imagine what.
It's up.
Yeah, it's up about 23 bucks.
It's up another
right
23
now.
bucks right now, Alex. Trading $334.
Let's dive into the earnings then. It seems like most of them are out. We got Amazon here after the bell. It's up about 22.5 right now. Closed it right south of 312. And again, up about 23 bucks. That at the money straddle was about 24 bucks going into the end of the day there. So it seems like they're right about at the cusp of that. We'll see how that works out. And GOOG seems to be on the other side of the equation. GOOG closing right around 510.5 or so, pretty much up marginally on the day. And in the after hours, looks like it's off about 10 bucks. Had a lot of people writing in. We got some questions later saying, hey, is GOOG vol cheap enough to buy here? Well, it seems like so far the answer was a resounding no. That straddle went out around $21 or so, and we have, like I said, about a $10, actually about $9 move in the after hours right now. So far, at least, both of the one name about keeping pace with its straddle, and the other one so far dramatically underperforming, which is kind of interesting for GOOG. Mr. Sebastian, what was of course, a lot of earnings going on today. What was the talk du jour over there in the pit chat today?
You know, I was watching Facebook a lot. That was one that was moving around. I've been Alibaba is another one where, they came in and just absolutely crushed the stock, crushed the volatility. But what was interesting was they left the term structure a little bit wacky. So there was some trading there. And obviously we had guys watching Amazon. One thing that was interesting with the Amazon, the big trades I saw were primarily put sellers. So I think there were a lot of people that maybe saw it not going down very much, but didn't see as much action on the people thinking it was going up. And then, we had a nice long talk about Apple. And, to one thing that's interesting is, and I will settle Apple here is, they had such a ridiculous quarter and they're not at their all-time high. It's a little strange. And Facebook is another one. They had blowout earnings, blowout revenue, but people are watching the traffic demographics and they don't seem as excited. Google's, who knows? Amazon, I got to read through the tea leaves, but that's a nice move in Amazon today.
Yeah, and the point I want to make, which is again, something we were talking about up here, the week 5, the Jan week 5 weeklies, the options that go out tomorrow, we're trading, 190 vol today. And when you think about that, first of all, number one, it's a question I get all the time. How can the week 5 be trading 190 vol and Feb regular, the old third week, we're trading 50? In fact, the SIBO Amazon VIX, and some people might not know that SIBO calculates a volatility benchmark on 5 equities: Amazon, Apple, Goldman Sachs, Google, and IBM. And I'll use this for a shameless plug. Those are what we use in Idea Hub to position the iron condors and credit spreads out. We use the SIBO benchmark, and I really like the SIBO product. It's a shame nobody trades it. But one of the questions that came up a lot today is, boy, I don't want to trade those week 5s, the 180 vol or 190 vol, and I think the Feb week ones were 90 vol, but the Feb regular expirations were 50 vol. Now, will you get as much bang out of the Feb? No, because the Vega's not the same, and those little weeklies that are expiring tomorrow, and I know market makers are all going home tonight praying how it's going to open and taking lots of Excedrin and Tylenol. Does the volatility number really mean much? And I know this is going to start a discussion, and I think it's a great topic to talk about. But, you know, when things are essentially expiring in minutes or days, I'm not sure the implied volatility number is that relevant. I'm not saying the number isn't accurate, but when you're looking at vol on something that's coming out after the close on Thursday that settles at the close on Friday, you're going to see huge volatility numbers. Now, if you choose to play in those, fine, you're going to pay that vol or pay that vol or receive that vol if you sell it. But if you have more of a little longer time frame, and Fed regular expiration isn't really that long of a time frame. You know, we're not talking leaps here. Those were trading 1/3 the vol. Las Vegas? Yep. Las Theta? Yep. As much fun? Nope. But they're 50 vol versus 170 and 180 vol. So just something to consider at times like this is, yes, the weeklies are interesting, they're amazing, and lots of people are going to be heroes tomorrow. I will hear more stories about successful weekly traders in Amazon if it opens 25 or 30 higher tomorrow than there is open interest in the front weeklies.
Yeah.
But be that as it may, be aware of the fact that you can go out a little bit in time away from those weeklies, not telling you have to, but just telling you that you could have gone to the Feb regular ones, what we call the Feb 15s, and they were 1/3 of the vol of the weeklies. In hindsight, if it opens 30 higher tomorrow, those weeklies are going to be a once-in-a-lifetime trade.
Yeah, you know, and to the point, for how many, you're going to hear all sorts of stories about how great people are from Amazon. You're not going to hear a lot of stuff. It's interesting. All of the Facebook long straddle people are probably super, super quiet, right? Not a lot of chatter on that. That was one that got, you know, Facebook, the straddle went out almost $6 and settled around $1 today. They absolutely crushed that thing. It ended up $1.50. I'm sorry. They absolutely crushed that thing today. And so for every winner, there is some losers. And Alex, I couldn't agree with you more. You know, especially in these earnings, I think it makes a lot more sense to go long from, 2 to 3 weeks out, and then maybe use some of these short-term things to pay for it, using things like diagonals and different things like that to really harvest all that premium, as you might say.
So today, when I say today felt like a good day, Mark and I are on the same page. It's amazing.
It's incredible.
Except when it comes to watches, there will be no détente on the watch.
No,
front.
but I'm now coming over to your house. I'm now coming over to his house to look at his watch collection. I'll tell you that one.
He just wants to see the iWatch once you get it.
So let's just be clear on this, because people know where I live. The collection is in the safety deposit boxes. Okay?
All right. Well, I'll check the safety deposit box. Go check out all your watches.
Don't go show it up in the driveway. The insurance company has rules.
While we're on the subject of earnings, I'll just hit on some of the rest of the ones. You mentioned good old BABA. BABA, of course, taking it on the chin today. The little bit of the shine kind of wearing off that one today. They were off about 9%, closing right a little bit south of $90 today. They've been averaging about 200,000 contracts going into earnings, doing 450,000 today, just lighting it up. A ton of it on the call side. You might look at it and say, oh, wait a minute, this thing was off hard. Why is it calls? Looks like it was all those diehard bulls getting out hard, because there was a lot of short dollars going in today on the call side and the put side. Everyone's just blasting out premium out there in BABA today. So all those bulls looks like they're giving up the ghost en masse. Nearly 300,000 calls alone going up out there in BABA. And earlier, before the open, we didn't get to talk about the before the open ones that much, but we had Ford getting outside the tech sector a little bit. I know you talked about Ford a few times or so in the past. Uncle Mike, I know you keep an eye on the automobile sector a bit. It didn't sound that good. Their profits fell 98%, but they had warned about that last year, that they were going to have some tough times going 2015. So the stock actually rallying a bit today. Went out, let's see, yesterday about 14.5. The money straddle went out right about 50 cents. So today it closed right around 14.90 or so up about 40 cents. So it was unched yesterday and opened near unched and rallying a bit hard today. So not a big move coming out of there, pretty much as expected, and certainly not as dire as it might have seemed given the initial shine on those earnings. Uncle Mike, I know you watch Ford, and of course I know you still are probably digesting those Apple numbers. So first off, did you keep an eye on Ford? Have you been playing it at all? And then what's your take on this still raging debate out there in the Apple land? Are you going to buy an Apple Watch?
No, I'm not going to buy an Apple Watch, but I will. I'd like to see yours, Alex. I'd be curious to see what it's like once you get it.
I will be there first day. After I spent all day yesterday saying I won't buy one, I don't need it, I like the complicated stuff. We sat here and I paused for a minute and I said I'll be in the store the first day. I'm just an Apple fanboy.
I will say I am firmly in the smartwatch camp, so I'm probably a bad person to comment on this. But go ahead, Uncle Mike.
Just to...
Keep in mind, guys, I archive everything. I have to by FINRA rules.
There you go. Just to give you... I've been out of Ford for a while. Still like to look at it from time to time, but just have not been in it for a while. But just an ending note on Apple. Just once again, the numbers of the actual price of the stock is the bottom line most important thing. Apple can have all the blowout quarters it wants. It can do this, that, or the other all at once. And the bottom line is it going up in price? To add to what I said earlier, to add to what Mark even said a little bit, it has not made new all-time highs. And so on that note, I will say this, probably a small portion, maybe about 10% of my Apple holdings, I actually sold next week's 120 calls on it as a cover. I'm sorry, the 119 calls as a covered call on it. So be that as it may, I'll believe it when we make new all-time highs. That may happen tomorrow, might be happening as you're listening to this show right now. You're saying Uncle Mike's an idiot, but I think there is a time to be prudent. There is a time to look at the actual stock price itself, and we're never going to make any new all-time highs until we go above the 119.75 level, and until we do that, we're not making new all-time highs. That's the bottom line.
Mike, how much do you think of that as the strong dollar? Do you think that's a drag on the stock price?
It could be in terms of like what China's doing, but I think that I'm laser focused right now on that number, that 119.75 mark, and until we break it, that's the barrier to new all-time highs.
So if we go up there and hover that 119 strike, are you rolling, or are you letting it go away?
I'm rolling.
That's what I thought.
I'm rolling at the 120 level. I'm sorry, I misunderstood you. Around 120 is when I would start to roll.
I knew it. I knew you would never let it get called away, sir. I just had to check. I knew it.
Hey, I sold it back. I did sell it at 620 on the way down, though. So
that's true.
For the record, I did get out of it on the first run down before it went way down.
You did sell it once, so that's true. You have one sale in your book there. I like it. All right. So we could keep doing this forever, listeners, but we got to keep rolling with the rest of the show. So it's time to roll right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show where we break down the weird, the wild, the woolly activity that is lighting up the old tape today. And we just got off that hot discussion of Apple and Amazon, all those other hot names lighting up the tape, so we wouldn't be complete unless we dove into that other hot market mover of the day. Of course, I'm talking about Assured Guaranteed Limited, ticker symbol AGO, closing today $24.82, pretty much unched on the day. This is the name that does about 3,000 contracts a day, so from our Odd Block perspective, fairly robust, and doing 21,000 today, so very, very aggressive paper out here in good old AGO. What caught our eye in particular was on the put side and a little bit farther out than what we usually talk about. It wasn't front week or even front month. It was out in July. In particular, it was the July 24-21 put spread that went up for, looks like $1.07, 10,000 times in multiple blocks. That's a lot of the paper to get up, so they had to get it on multiple blocks on multiple exchanges. It looks like on first blush that this is selling paper. Appears to be opening about 7,000 contracts open on this strike already. So it looks like this is probably additive, and it looks like it might actually be, there is another, if you look at the open interest, another spread went up recently. The July 25-22 put spread went up. It looks like this is additive paper perhaps to that. So they have 10,000 of the July 25-22s. Now it looks like they might, in addition, also be short 10,000 of the July 24-21 put spread, which is an interesting strategy if that is indeed the case. We'll have to pay attention to the OI numbers. 10,000 open on the 25 and 22 strikes, 7,000 open actually on the 24,000, only 1,000 open on the 21. So clearly open on the 21s and on the 24s. Mr. Sebastian, I guess we'll start here. What's your take on our friend A blasting out some puts, looks like, and B looks like he's doubling down here in good old AGO?
Yeah, I mean, I don't know a lot about it, but it's probably somebody that already had an axe to grind. You know, in these kind of trade by appointment stocks, you know, it's somebody that already has some sort of position involved. You know, maybe he's trying to get in, maybe he's trying to get out, maybe he's got, you know, something else going on, or maybe this is even against an over-the-counter trade. You just don't know. You know, these ginormous trade by appointment trades are always, you know, interesting. You know, as I look at the stock, you know, it's been around a while. I mean, it's not a particularly new company. It has had a nice rally. You know, year over year, it's up, I don't know, about 20%. So, and it's well off its low that we saw in October. So, you know, it could be just somebody kind of playing that. But aside from that, you know, I don't know.
Yeah, it's a weird one, particularly if they are indeed doubling down. I think that's the first time we've seen someone just doing that, saying the heck with it. Let's do both strikes. It's definitely an interesting strategic choice. I'll have to keep an eye on this one. This is going to go in our filed in our to be watched category to see if we can see exactly what the heck this guy is up to out here in AGO. Meanwhile, we're going to roll on into our next. These are all the hot names of the day, and we're going to move on to Newfield Exploration Co, ticker symbol NFX, another big, huge mover and shaker. Can't start your day without checking your quotes on NFX. Closing today, 28.5, up about a buck or so, about 4% on the day. So this one does, another one, decent paper, about 4,300 contracts, doing nearly 6x that today, about 24,000 or so on the day. And what we saw out here in good old NFX was a pretty sizable put roll, and it seems to be, the way we wrote it up on the site at least this morning, was it looks like this guy got, let's say, a wee bit burned, and now he's trying to roll yet again. And what we saw in particular was the March 37, Jan 2016 40 put spread, which is an interesting time frame in and of itself, going up on a bit of a ratio. We highlighted it going up 6,000 times this morning for $3.60. Looks like paper was buying the March, selling the Jan. As the day went on, looks like a few more went up to the tune of, actually looks like there was 3,000 going up in the June 40 puts as well. Those looks like they're closing because that has open interest of 3,000. Then a total of 9,000 of the Jan 40 puts went up. So it looks like he closed out his March and his June, and he rolled it all out to a higher strike in Jan, which is kind of interesting again, looks like they're trying to maintain a relatively aggressive short put position. And looks like this guy has so far been burnt pretty hard. Again, 37 strike was where he was short initially. This thing trading 28.5 right now, so he's well south of that strike. And instead of adjusting down perhaps a little bit, may have been the more perhaps sensible play. This guy's saying, no, I'm going farther out and I'm going farther up. Again, this is perhaps the flip side of talking of that short put argument we talk about here all the time. Watch out for gaps and things like that. This, our fellow here, our friend, appears to have been bitten by that and doesn't seem to be willing to give up the ghost, at least anytime soon. Mr. Seabass, this looks like a kind of trade you'd be interested in, you know, drawing the line in the sand, then saying, the hell with it, I'm going to go even deeper in and farther out.
Gotta love it. You know, roll.
Is that the option pit way? Is that what you teach your clients and mentees out there?
Keep doubling down, keep taking losses. As long as you don't realize a loss, it's not a real loss, you know?
Exactly,
and if
exactly.
You just, you know, that's just, brilliance. You can't lose there. Yeah, no, I've seen some managers do that in the past and, you know, legitimately cost, 80 or 90% of the account, none of it realized because the guy just keeps rolling. You know, maybe the guy really did put a line in the sand and thinks this thing is eventually going to pop, but, this is just not something that would be within my risk tolerance.
Yeah, it does take some cojones to go out farther up. And he's like, let's put it on more and higher out, not coming down a little bit closer to a more reasonable
when in doubt,
strike.
Strap it on.
Yeah, I guess. Interesting approach. That's why we call it the odd block, listeners. Not all of them are not exactly winners, and sometimes they're a little bit of a head scratcher. Going to close things out here with a name that's been in the odd block quite a few times. This is American Eagle Outfitters, ticker AEO, pretty much unched on the day today, doing decent paper of late, about 9,300 contracts a day, only doing about 6,500 today, so actually a little bit light today. And what we saw, what caught our eye, was pretty much one big block of the Feb 15s going up 5,400 times. For 17 cents. It looks like this is a buy rider perhaps coming in and just taking some of those off the table. There are about 8,300 contracts open, so if that is indeed the case, then our friend here may have more to go. We'll have to, of course, keep an eye on the old open interest to see exactly what our friend here is up to and if he has more cooking. Meanwhile, we're going to keep on cooking with the show right on into the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. This is indeed the portion of the program where the Viceroy takes us behind the scenes into the land of fancy watches and even fancier trades known as Options Express by Charles Schwab. Mr. Viceroy, I'm guessing a lot of paper was hitting the tape over there at OX today. You got Amazon, you got GOOG, you had Ford this morning, you had BABA, a lot of things, a lot of perennial favorites for the OX clientele. So what was going up over there? What was catching your eye at OX today?
Well, I'm going to do a very quick Express Block because I think I've already spoken enough, and I know we're running short on time. But two things. I was in meetings today, so I didn't get a chance to do my survey of Grigas and the help desk. But as I was sitting in the meeting today, one of the help desk guys came in, and I said, "How was your day? How busy were you?" And he made a real funny comment. He said, "I never got past the letter B today." I said, "What do you mean?" He says, "Everything was Apple, Amazon, BABA, and Boeing." He said, "Did a little Qualcomm today and a little Lulu." And I think Lulu is a stock where just we've got a lot of option positions. I mean, it was just a favorite for the longest time. But his comment was he never got past the letter B today, which tells you where most of the activity was. And one standout we haven't talked about the last couple days was Boeing, which had great earnings. I think it's up $13 or $14. Earnings were earlier this week, and it still moved $8 today. But today was a real interesting market day. Today was a day where, at one point I walked away from my desk to walk into a meeting, and I came back, and the Dow had moved almost 300 points. So I think these are still thin markets. I know we've talked about it a lot on the show in 2014 and 2015, how the market maker dealer community has changed and how you're going to get these kind of spikes. It's not going to be as orderly as it was. And I could get on a soapbox, but I'm not going to do that in the time we have today. But real interesting, real busy day up here. But just that one comment that I never got past the letter B today, that was the character trading today.
Yeah, it's interesting. And as you were talking, I was pulling up Boeing. Not a perennial stalwart here that we talk about a lot on the show. You don't hear about a lot of retail flow flocking to Boeing, but it does fairly decent volumes. I'm doing about 21,000 contracts going into earnings and lighting it up. Earnings, like you said, were yesterday and still lighting it up today to the tune of 91,000 contracts. The stock's up about $8 today, a little over almost 6%, and it was up again yesterday. It was trading about 135 yesterday, trading nearly 148 today. So this thing just lighting it up, as you might imagine. 2-to-1 calls over puts. A lot of love for the calls on a day when the stock's up 6%. So Boeing might have to feature in our rotation a little more, as they are stealthily blowing the doors off it over here today. So a lot of fun stuff to watch. Not just the BABAs and the Amazons and the GOOGs and the Apples and all that fun stuff, but some other sectors lighting it up as well. Speaking of lighting it up, it's time for you guys to do just that, because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is indeed the portion of the program where you guys get the chance to join us here, sound off, make your questions or comments known here on the old program. No shortage of ways for you guys to do just that. Surf on over to the flagship, the mothership, theoptionsinsider.com. Leave your question in the website feedback form there on the show notes. You get the comment routed to us here on the program. Questions at theoptionsinsider.com for all of you diehard email users. On the social side, twitter.com/options, facebook.com/theoptionsinsider, or stock twits. We are Options Insider on stock twits. That's where our first question comes from today, from Ernitin 14. He writes a little timely one with GOOG announcing today. He was asking a lot about GOOG vol throughout the day, and he writes in and says, if vol wasn't high enough to be sold in Apple, then is it low enough to be bought in Google? Is it priced this way for a reason, or is the options market clearly wrong? Well, looking at the after hours right now, it seems like the answer is a resounding yes. The options market was aggressively wrong. It seems like, at least, looks like it's unched right now in the after hours, unless my numbers are off. Either way, it is substantially south of where that straddle went out today, which I believe was $21 today. So this thing clearly not a screaming buy today. Any premium buyers over there in the pitch chat today, Mark, that were looking to gobble up some
No,
GOOG?
we were looking at, everyone was like, this looks gross. We all were like, bleh.
Gross?
Yeah.
a 30 vol in Feb is gross in Google to you?
No thanks. Yeah, I mean, that was a big stay away. Amazon, Apple, none of them really looked that appetizing. So the ones that have been kind of more interesting have been kind of the tier B stocks, where things are moving around and there's enough liquidity to get things done. That's where I found a little bit more stuff that wets my beak, things that warms the cockles of my heart.
You know, Alex, this is kind of a good example, too, of what you were talking about earlier, illuminating the quote-unquote vol that's in the weeklies versus maybe the more real vol a month or two out, like in the Feb. You had the same situation in Google. The Febs were elevated but still reasonable, but of course, comparatively now, clearly unreasonable. But compared to the weeklies, that stuff was just out of whack. That probably is a good conversation for a show down the road about the difference in weekly vol/gamma versus actual vol a couple of months out, and the pros and cons of each. Probably maybe post-earnings season, we'll get into that.
I agree. I think it's a great topic. 2014, all you heard from everybody was sell earnings vol. It worked, and then you had that one Google earnings where they moved $100 and you leveled the playing field. The simple answer is there is no simple answer. That if you're going to play earnings, you don't want to play it in an unprotected fashion. It's great to talk about something working 90, 91, 92% of the time, but you want to do a strategy that works 90% of the time, but you want to have a laser focus on what is the other 8 or 9 or 10%, and will that 1%, 2% event kill me or take away everything I earned this year. And that's the challenge of playing earnings. And to, Mark's point, if you're going to play earnings, play where there's good liquidity, understand the risk, and maybe consider spreading calendar, some type of fly, depending on where, if there's skew. But don't kind of be naive about it and say, I only sell vol going into earnings, because you're going to get that one event that's going to hurt.
Yeah, this one clearly hurts.
Yeah, I mean, I've found earnings to net end up being kind of a wash. I think a lot of people are like, think there's some end-all be-all. I don't think there's a lot of edge. And Goldman's actually got a couple of different studies that, you lose really kind of, it's really difficult to make a lot of money just playing vol from a straight vol perspective into earnings. They end up kind of washing out. And there are a lot of those strategies, Alex. You would be amazed how many retail traders see the 90% and never fathom how bad the other 10% can treat them.
Yeah, and that's, I used to do that as a seminar question at the SIBO. If I showed you a strategy that would make money 90% of the time, how many of you would do it? And, everybody would raise their hands, and every once in a while somebody would say, can you describe the other 10%? And you say, yeah, it's awful. And all the hands go down, and that would be your lead into trading spreads instead of trading straight out, short options.
Yeah, one of these days, Mark, I'm going to have our cohort there on VolViews, Jared. I keep giving him a hard time about his straddle study. I want him to do the definitive earnings straddle study. Then we can put that question to bed for once and for all.
Yeah, I know.
He keeps demurring on that, but I'm going to get him to do it one of these days. I'm going to twist his arm. And then we can get some real numbers outside of what Goldman did a few years back.
To fly to Chicago to buy me that steak.
Yeah, that'll be nice of him to buy us all a nice big steak.
Why do you get a steak for taking no risk?
It's my show. I get the steak. All right, let's move on here. We got time for one more question. This one comes in from Rohan. This is kind of the counterpoint to what we were talking about, the question a few weeks ago, someone asking about becoming, about pros and retail, with someone else writing in on that same vein. This one comes from Rohan. He writes, do you think it's viable for an active retail trader to become a professional retail trader using primarily the freely available tools from OX and other retail brokers? How viable is that in the current environment? Would I always be at a disadvantage from the pros picking me off? Is this just a pipe dream? How much would you say the average pro trader needs to make to be viable? Thanks again for all the great programs you guys have put out for free. Congratulations on making it all the way to 400, and thanks to OX for making the whole dance happen. Well, great question there, Rohan. A lot of working parts to it. First off, thank you for your congratulations. It was indeed a long slog to 400, but we made it, and we're happy to have done it. Now you got a great archive of shows to go check out if you guys have some time on a plane or a train or however you get to work these days. A lot of stuff in there. Maybe we'll start with you, Mark, because this is kind of your bread and butter at the end of the day. You guys are training retail to become, at the very least, more savvy retail, if not professional retail. So what would you say to our friend here, Mr. Rohan?
Yeah, I mean, I would say it's absolutely possible from a retail perspective to become a professional. Now, how much do you need? That depends on your nut, right? What does it actually cost you to live? That's what you need. I would say that it's very difficult if you don't have portfolio margin, it can be very difficult to really make a living. But, really the key, you don't have to be at disadvantage because, you actually as a retail trader, or really any trader, have a particular advantage over the market maker and the professionals in that you have the ability to initiate the trade. That is an incredible advantage. And if you learn how to take advantage of that, you absolutely can. In fact, I'll tell you, I've got a guy that came in through Option Pit that was a retail trader, and he was in the legal business, and he's done so well that he's actually, not only is he becoming a full-time professional, he's actually going to go become a market maker. And we've got a whole host of guys that basically sit at home and trade in front of a screen all day. But, the real question you need to ask yourself is, how much do you need to live and save? And, do you have the money to actually, including potential drawdown risk, to actually produce that capital? And the answer is, it kind of depends on you. I hope that's clear enough. But, yeah, you absolutely can OX has some incredible tools that market makers don't even look at. So yeah, the ability to initiate is powerful.
I remember when I first started trading, and my story, when shortly after I got cut by the Bills, about 15 years ago now, I had a job substitute teaching, and I was 320 pounds at the time and mad at the world because I just got cut by the Bills. So what I would do, I would substitute teach, hoping for another phone call from an NFL team. Never came. But what I would do is, if you've ever subbed before, anyone who does know that, you have to be a jerk to the kids or you're going to get walked on. So I would stand up in front of the class, say, "You will do this assignment quietly. You will not talk." And I'd stare them down for about 5 minutes, and then I'd have a whole hour of silence. So with that, that's when I read every option trading book known to man, and that's when I first got into trading. Now, shortly after I realized that my football career was over, I started trading and doing credit spreads. And this is before we had a lot of the education out there. The only real education that was in existence, there were two big companies. One of them's non-existent. The other one had to do with a cab driver with whom we will not mention on the show. Never bought a seminar from him, thankfully, but nonetheless, that was really all there was at the time. So I had my Options Express account, and I'm basically deciding what I want to do with my life now that I'm not going to be the next Hall of Fame football player. I'm pulling in $3 or $4 grand a month doing these credit spreads. And let me tell you, the whole world was stupid except for me. I could not believe it. And one thing that I did not account for on that is something that Mark touched on, was you need to plan for drawdowns. And so I went several months without drawdowns, and people would say, "So what are you going to do now that you're done playing football?" I'm like, "I'm trading options." Yeah, these things called credit spreads, you make 20% a month on them. Everybody else is stupid if you don't do them. I didn't really say that, but that's kind of what I was thinking. And then, well, needless to say, I lost $6 grand one day. And that was a major wake-up call for me. I didn't blow out my whole account, but it was kind of one to where I realized what I needed to do in terms of being prepared for drawdowns. Now, are credit spreads a good trade? At times, yes. I'm actually in one right now. But you need to prepare for the drawdowns. And so when you're planning on if you want to be a professional trader or not, make the determination of, when I lose, how much am I going to lose, and are the wins and the losses going to generate enough income to earn my living? If you don't factor in the losses, you're going to be in a great position for a couple months like I was, but then you're going to have a harsh reality hit you right in the face one day. Thankfully, I adjusted myself to where I'm doing this 15 years later. But at the time, I had a rude awakening, and I'd encourage you to not have that rude awakening, or get prepared by someone like the Option Pit to make it so that doesn't happen in the first place.
All right, Mr. Viceroy, take us home. What do you have to say for our friend here, Mr. or Mrs. Rohan?
I'm like a broken record because I always tell the Kenny Griffith story, but professional traders are evolved retail traders. Lots of people make it, but there's a ton of roadkill. There's a ton of people who didn't make it. And the two biggest stories, I think, in the industry are Blair Hall and Kenny Griffith. And both of them started when there was no technology, there was no portfolio margining. A laptop computer would have been a quantum leap. And they were all very successful. But when you meet them, they're very smart. And they studied very hard. And they had good risk management. And in 87, Hull almost went out of business. So everybody's point is valid about drawdowns. But have people done it? Yeah. I mean, if you read the press in Chicago, Kenny Griffith bought two $13 million, condos 2 weeks ago, and has, and I don't mean to make light of this, one of the most financially visible divorces going on in the Chicago area now. I think Kenny's worth, I don't know, $8 billion, $7 billion. Why split hairs? Started trading, doing convert arb in his dorm room. But let's be candid, it was his dorm room at Harvard. But he started with an HP calculator, didn't have computers. He's too old for computers. Blair Hall began doing implied volatility and theoretical value sheets on a very early computer he would have killed for the Dell laptop sitting on my desk today. Yes, people have done it, but just wanting to do it doesn't mean you're going to do it. You got to get all the education you can.
Exactly.
And they're very smart people. And they went to good schools, and they learned an enormous amount of math. There used to be a trading firm in Chicago called the O'Connor Partnership. And it was one of the dominant firms in the Chicago trading community. Some people would argue maybe the most dominant, but that's splitting hairs. Most of their employees didn't come out of business schools or engineering schools. Many of their senior management came out of Brown. And you say, well, it's not known as a great business school or engineering school, but it turns out a lot of smart people. And then O'Connor turned around and trained them. So education is key. It can be done, but just wanting to do it isn't going to get you there. You need to manage risk. You need to keep your expenses down. But, Kenny Griffith, convertible ARB, it still exists as a strategy today. He's probably the biggest options market-making firm, I suspect, in the world today. And if he's not the biggest, he's in the top three.
Probably either him or Timber would be the two I would think would be the two biggest.
Yeah. Well, here, Pettifree, classic example.
Yep.
Pettifree, rocket scientist? No. Smart guy, right? Got out of Hungary just before the Nazis exterminated the balance of his family. Came here and is a billionaire and probably one of the smartest people on the street. And he didn't have the advantages that a Blair Hull or Kenny Griffith had. And I'm not making light of anyone's background, but Pettifree, if it had been 5 days later, he wouldn't have made it out. So, yes, people have done it, but they're a select group.
Yeah, and Alex, you do bring up a good point. I mean, everybody here got taught by somebody. I mean, heck, how many guys when you were in the business as an active trader, how many successful traders that were actually hired to become traders did you teach, and out of how many actually became successful? I think about my market making class. I started out in New York with 22 people. 7 of us got in a badge. 4 of us were trading a year later, and there are now 2 or 3 of us that are still in the business.
Listen, there's a lot of roadkill. There's a lot of folks who wanted to do it and didn't make it, and the business had changed. And Blair Hull today isn't a market maker. He's a fund manager. Kenny Griffith is arguably the first or second largest, biggest market maker. And I don't know what Citadel, has got 20 billion or,
huge.
Money that's big to any of us is their daily rounding error. And boy, I shouldn't have said that because that got me in trouble once too. But billions of dollars, just billions of dollars, but very smart, hired good people, traded converts, probably the most inefficient market. And think about that. That's what you're looking for, right? Convert ARB is still a strategy. Ray Dalio. People like that at Bridgewater. I think Bridgewater manages $100 billion today. George Soros, put aside his politics, but same story as Pettifree. If he hadn't gone out when he did, he wouldn't have made it here. But there are lots of people. The B schools turn out a lot of talented people today. Charlie Jacklin used to be one of what I call the SIBO poster boys, the guys we'd call on when we were trying to rev SPX business. Charlie's now retired, ran Mellon Asset Management and ran an SPX Plus account and a Treasury Plus account. Brilliant. But he went to Kellogg. He was a Northwestern alum. He understood math, surrounded himself with really smart people. But people make it all the time. And this is an industry where if you are good, you can do well. I worked at Merrill Lynch in 1980. I used to hire new brokers, and we'd talk to new brokers. And, somebody would come in and say, well, I can derive the yield curve, and I can calculate the term structure of interest rates. And we as a broker were not as interested in him because we had people who derived the yield curve and could do the term structure of interest rates. They could do that on the terminal in front of them. If somebody came in and said, I'm a manager in the Xerox region. I've taken my region from 9th in the country to 2nd. I'm really motivated, and yes, I'd like to make a lot of money. That helps. That helps. Motivation and education is 2/3 of the equation.
Well, great question, Mr. and Mrs. Rohan. Unfortunately, we have to leave it there. Probably can keep going for a while on that. No time for Around the Block. We'll say really quickly, looks like the worm has turned out there in Google. A 10-point swing. It's essentially unched now, back around 510. It was trading around 500 very recently. Another argument perhaps for some after-hours options trading, but we'll leave that argument there. The Amazon continues to rally up about $26 right now. So that's about it for the Around the Blocks. Also all the time we have for this episode of the Option Block. But before we go, really quickly, let me check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. Perhaps we'll start with you this time. Uncle Mike Tusa, what's coming down the pike in the land of RCM Wealth Advisors?
Real quick, call me. Lots of things. 312-212-3531 or mtusa@rcmam.com. Would love to work with anyone, even if you have a couple $100 to invest. We work with the little guy and the big guy as well. Give us a call.
I like it. If you have one shiny penny, give Uncle Mike a call. Good stuff. Well, maybe 2 cents. I'll give you that. All right. And Mr. Sebastian, what's cooking in the land of the pit?
Just got some webinars coming up. Just read our blog, optionpit.com/blog.
There you go for more of that juicy options insight. And last but certainly not least, Mr. Vicer is coming down the pike in the land of Options Express.
So one thing I haven't talked about in a long time, and I'm remiss in not talking about it, the $150 Amazon gift card, still available to new accounts that are funded. There are terms and conditions that apply. When you come to the site, optionsexpress.com, navigate down the page, you'll see the Amazon offering. Tuesday, February 3rd, Jim Wyckoff, who writes the famous Wyckoff letter, is going to do his monthly futures outlook. Wednesday, February 4th, Nina's going to do part of her continuing education. She's going to talk short calls. Thursday, February 5th, Nina's going to do protective puts in IRAs. Our next live event, Saturday, February 21st in Las Vegas. What happens in Vegas stays in Vegas. Jimmy Roseanne and his crew will be out there. All the events are free. You don't need to log in to get to the education events. Just come to optionsexpress.com.
There you go, listeners. You heard it from the man himself. Surf on over to optionsexpress.com. You'll see the Amazon gift card right on the right-hand side there in the lower portion. Scroll down. All you need is $1,000 to fund your account, and you're good to go. And Alex will send you one of those nice, fun gift cards if you do a few trades and a few other things in there. Check it out, optionsexpress.com. to learn more. And on behalf of the Viceroy and the Greasy Meatball and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending us such great questions. Keep them coming, and we'll see you next week right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.